JJ the CPA here. The CARES Act has something very juicy in it for those employers that were affected by the coronavirus crisis in that they had to shut down. So in the Families First Coronavirus Relief Act, it provided 3 different credits. I've got a ton of videos on that, so go to the coronavirus tax credit videos that I put together. And if you go to jjthecpahelp.com/credits, you'll find a ton of information in there about those payroll tax credits. So I don't want to revisit those in any detail other than to say there's payroll tax credits, which is a reduction of the payroll tax that the employer pays in to the IRS. So they take a credit and reduce down the amount they pay to the IRS for payroll taxes. If they have an employee that's been out with COVID or symptoms of COVID or under quarantine or told to quarantine. There's also credits in category 2 for employees that have to be out caring for somebody with COVID symptoms under quarantine or told to quarantine. And then there was a third category that if there was an employee out because their kid's school was closed, they had an under 18-year-old kiddo home, school's closed, and or the kiddo didn't have a caretaker that wasn't available, and you're under a health emergency, there were credits for that. So first, the employer had to pay the employee to qualify for the credit. So if you had an employer paying someone who was out for one of those purposes, then there were these 3 different credits that were they are quite nice. There were some limitations to that. Now, in the CARES Act, okay, I've got other videos about this. Please go to those talking about the Paycheck Protection Program loans, which are the forgivable loans. You get a loan based on your payroll of the last 12 months divided by 12 times a factor of 2.5. You include all the related employee payroll costs, including payroll taxes, insurance, and retirement plans. So you group all of that expense together, divide by 12 to get a monthly average times a factor of 2.5. That's the amount that you can borrow under the PPP loan. And then if you use those proceeds in the 8 weeks following when you get the loan for payroll, rent, utilities, payroll taxes, the retirement plan match, and employer paid health insurance, including interest on the actual business loans, to that extent, you don't have to pay back the loan. It would be forgiven. But there is a third huge provision in the CARES Act, okay, that establishes a refundable payroll tax credit of 50% of eligible wages paid by eligible employers to eligible employees. We'll get to that. During March 13th, 2020 through 12/31/2020, up to a maximum of $10,000 of compensation per employee. So it's a 50% credit on the wages that are paid up to $5,000 per employee, okay? So be clear on this. So we're going to talk about an eligible employer and an eligible employee, but on up to $10,000 of compensation to that employee, okay, they would get a 50% tax credit, okay? Tax credit as in they would pay that much less in payroll tax. Now, hold on this, because the credit is available to employers if a government order related to the pandemic requires them, this would be the employer, requires the employer to partially or fully suspend operations, or if their gross receipts have declined by certain thresholds, okay? So there'll be some caveats there. But what this is saying is that if you have a business or an employer and the only reason their employees weren't working is because of a partial or full shutdown by the government, and they still paid those employees, they are now given a 50% tax credit to those employers for paying those employees, okay? So, with the first, or the Families First Coronavirus Relief Act, okay, the only way that the employer got a tax credit is if the employee had COVID or caring for someone with COVID or quarantine or their kids were out of school. So if you had an employer and they had to shut down because of a government shutdown, they were not able to get those 3 category tax credits, okay? Now there was a technical way to get potentially the 3rd tax credit if it was due to a health emergency. There's a provision there. But this is a juicier tax credit in the sense of you have an employer that doesn't qualify for those other 3 tax credits because they are actually getting 50% of whatever it is that they've paid to the extent of $10,000 per employee. Now, employers with more than 100 full-time employees in 2019, right? So you're just looking at calendar year 19. Those employers will receive credits for wages paid to employees while they aren't providing services, okay? Now, for employers with fewer employees will receive credit for wages paid while operations were suspended or during the quarter in which the company had a significant decline in gross receipts. So the big difference there is that if you have an employer that in 19 had over 100 employees, the credit's only going to apply to the employees that weren't working. So the employer paid them, but the employee wasn't working, okay? They're getting a credit. Now, if you're less than 100 employees, it's kind of an expanded benefit, so to speak. You're going to get that same thing if you have an employer that's paid them, but the employees with that were paid not only while operations suspended, but also paid when there were significant decline in gross receipts. So we'll have to see the details on that. But what that's saying is the business was still open, but it saw a massive decrease. So I have a client that I'll have to call tomorrow. They had a 75% decrease, but they were still open, still paying their employees. But they have less than 100 employees. So they're going to be able to get this tax credit, even though they stayed open, but because there was a significant drop in their gross receipts, they're going to be able to get a 50% tax credit on up to $10,000 of compensation to each employee, and that would be while the operations are suspended or during the quarter in which the company had significant decline in gross receipts. So tax-exempt organizations are eligible for this employee retention credit. Now, here's 2 things, though, is that employers can't receive the credit if they receive a loan under the Paycheck Protection Program, okay? So if they're getting a loan for that, they're not going to also get this tax credit. So if they're taking a loan, you don't get this tax credit. But I will tell you this right now. What's more valuable, the employee retention credit or the Paycheck Protection Program loan? It'd be the loan all day, because in essence, that is 100% credit in essence, okay? Because you're getting a loan based on your payroll, and then you're paying employees, and whatever you're paying your employees, as long as you're paying them within that 8-week period, you're not going to pay back any of that loan. That's 100% tax credit in essence. Also, employers can't use the credit for wages taken into account for paid leave credits established under the Coronavirus Relief Act. Okay, so basically what this means is, on those wages, you got to pick. You're either going to get the employee retention credit, or you're going to get the credit that is the qualifying amount for the person being out for COVID, caring for COVID, or because their kids were done. Now on that, you'll just have to do an analysis, because this would be not all or nothing. It's saying that employers can't use the credit for wages. So if you had an employee that was out, and you can qualify for the credit, which on one, it's for up to $511 a day. Go to my other videos on this. The other 2 were up to $200 a day. There was a limit of 10 days for 2 categories and a limit of $10,000 per employee for the 3rd category. Point is you'd have to run the numbers and then compare it to what did you pay to that employee And would a 50% tax credit be more advantageous? But if the employer does get that Paycheck Protection Program loan, then they're not going to get this employee retention credit. So there's a ton between the Families First Coronavirus Act and the Employee or the CARES Act to help employers keep, retain, pay, continue to pay employees. So this is huge. Be sure that you're looking for these credits so that you can make sure that you're getting maximum tax credits. That's what it's there for. All right. Hey, I'd love it if you'd subscribe to my YouTube channel, hashtag JJ the CPA everywhere on social media. I'm constantly putting stuff out. I'm posting more than one video a day and just trying to get good information out there. I've got a book, as you can see. It's called JJ the CPA here. You can catch it on Amazon. It's the top 60 questions of my clients over the last 27 years in practice, and very few of them have to do with tax. It deals with banking and business and how to work with the other advisors and insurance and whatnot. So, all right, hey, thanks for tuning in. And then don't you ever forget, you've never met a CPA quite like me.